Today I'll be talking about the S&P 500 setup as we start October. Now, as we know, we're coming off two very strong monthly finishes in both August and September. We see this pretty clearly here on this monthly chart where the S&P had that severe downturn to begin August and then down 4 straight days to begin September, and spent the rest of the months, both of those times, rallying and finished at the very top of the ranges. And we start October at a new all-time high, just like we started September. And that, of course, is coming off of the market being up 10 months out of the last 11 and 5 straight. And compared to what we've seen now over the last 10 years or so, it's clearly one of the best runs we've seen, starting with the 2022 low and just about 2 years worth of it, which kind of lines up with what we saw from 2020 to the end of 2021, and then from 2016 to the very beginning of 2018 before the vol implosion. And so let's talk a little bit about how we've got here 11 months after the low from last year, and we're comparing it to what we've seen since 1990. And so at the end of September, the S&P was up about 36% going back to November of last year. And so here it is, and we look at all the times when the S&P was up at least 35% over an 11-month period, and there really haven't been too many of them. Now just 6 going back to 1990. Taking a closer look at what these, not surprising that 3 of them occurred during the internet boom, but interesting that we didn't really see that begin until the second half of it for the most part, 1997, 1998, and 1999. The other 3 share the characteristic of happening 11 months after a key trading low. We can see them all clearly here: February 2004, December 2009, and February 2021. So that brings us to September 2024. And again, coming off of a low, but not a major low. Remember, this was the 2022 low in October. This current 35% run is being measured off of this little low, which you can hardly see here, but was the August to October 11% sell-off. So from this angle, clearly not at the beginning stages of this rally. So it's more like, again, from this perspective, maybe the 1990s, where we have a big run like this taking place after we see substantial rallies already behind us. Another key trait that each one of these, all 6 shares, is that we did not see intense downturns immediately following any one of them here. Pullback, or in 1998, we know that we got that big hiccup, if you will, later on in the year, but it wasn't immediate. Now let's look at the 20 years before 1990. So going from 1970 to 1990 gives us a very different perspective. And so this is, again, 1970 to 1990. As we know, the 1970s was really back and forth movement until we finally had, a key low here in 1982. And so for the most part, higher, but buying after an 11-month strong run of at least 35% was not the right thing to do. And we see that here by highlighting the areas that saw immediate declines following strong 11-month runs. 1971, basically that nearly marked the top, with the S&P pulling back a good deal over the next year. Again, April 1983, we know the low was already in, but we spent a good part of the middle part of 1983 through mid-1984 pulling back. And of course, the one that happened in August 1987 taking place about a month and a half before Black Monday. And so it tells us, once again, that every time is different. Now, we have the last 25 years to show us that's pretty good at predicting additional rallies after strong 11-month runs, but we can only go by what the market is giving us. And right now, we continue to be in breakout mode, making new highs, but it's always about the next pullback and how the market deals with it. And so from that angle, we always like to look at the short term. And this is an update of the chart we show in nearly every video, 2-hour chart, 14-period RSI. Now, we have highlighted here the times when the multi-week rallies have extended to at least 6%. Only 5 times did that happen, going back nearly 11 months now. Now, 4 of them have happened since the April pullback, showing that things have gotten, of course, stronger on the rallies, but of course, more severe on the downturns as well. It also suggests that we probably don't have too much more in this particular leg of the rally, only because that tends to peter out after getting overbought. And really that's what's happened over just the last few days as market has slowed down a bit, hasn't really pulled back yet, of course, as we start October. That's been enough to take the previously oversold condition back down to even below the midpoint. The question is, how much further do we have to go before the market can reset and eventually reestablish itself and then can continue higher from there? Well, this is a look at that. Same 2-hour chart, but this one goes back just to the beginning of the year. And so, again, some of the biggest pullbacks we've seen since the low has happened since that point. Down 6%, down 10%, down 5%. And so it wouldn't surprise anyone the next pullback is maybe just as substantial as these. But don't forget, if we are now entering a new phase where low volatility is upon us, potentially, that would mean that we shouldn't be surprised to see the pullbacks be much smaller along the way. Now, let's say the odds are probably against that, as we know, coming into October, which typically is known for volatility as we begin earnings season with the election. But we can only go by what's happening so far. And so a lot of that has to do with patterns and what the next pullback does to the recent pattern breakouts. Now, we've been talking about 2 of them that went through 56.50. Here are both of them on the same chart. And we can see how important that is to potentially hold, where both of these broke out on September 19th and thus far held where they needed to and really haven't had a reason to think these will get tested just because of all of the declines up until the beginning of October had not even been greater than 30 basis points, going all the way back to the last 1% decline on September 6th. And so if this does indeed start to roll over more, and we do get a greater pullback, then of course we're going to hear a lot more about a potential topping scenario. And we alluded to this in the last video, and this is what it currently looks like, or could look like if things continue the way they are, where any high that fails to extend, of course, can roll over. And if that continues to happen, there's really not a lot of support over the near term to key off of. And so if it falls all the way back down to, below 54.50, down to 5400, and then rallies again, you can see how this can develop. This could be a major top into the election and after. Now, we know typically don't get a challenging environment in the fourth quarter. It has happened, 2018 being a clear example of that recently. But again, we can't ignore any potential scenario. But let's keep this in mind. If we do, in fact, get October volatility again, which wouldn't surprise anyone, going to feel bearish and we're going to hear a lot of bearish chatter. But let's not forget that if that does happen, this could play out, but so could this, where we already know that the toughest parts of the month for both August and September and occurred in the very beginning stages, in the first few days of August. We know historic decline for 3 days. We have those 4 straight declines in September with the last 1% decline happening there again. And so as the market extended higher, closed at its highs, got overbought, et cetera, seeing some air come out of the balloon before companies start to report, wouldn't be a shock to anyone to see another pullback occur relatively soon. Once again, it's all about how the market deals with it and if we can, in fact, get another higher low from here. That's it for today. Don't forget to check out these videos and subscribe, and I'll talk to you guys next time. Thank you.